Okay, so I'm in a trade at the moment. It's currently at R3, and I'd say this is about as good as it gets for technical analysis, setup and entry. Everything lined up with this trade. It doesn't always, and you can get some really good trades even when they don't all line up. You're never really going to hit that perfect ticks every box trade, but this one was great, to be honest with you. So you can see this is a H3 chart. You can see we tapped down into this order block on Tuesday, which took out the liquidity down here from this run. Okay, so we tapped down that and closed right the way back up here, and then from there we turned around and we pushed right the way up here, and by doing that what we did is we broke through some short-term highs, being this one and this one. Not too sure if we took these. Yeah, we did indeed take these. So these are points in the market that price rejected off of previously. So we broke 3 short-term highs there. We also, during this run, we left a great big imbalance. So we all know how to mark up imbalances from that week to that week. You can trade it at a 50%. When price opened up, you can see that black wick there. It hadn't quite tapped it, so I've marked it there on the chart. So I was looking for a buy. When we go down to the 1 minute chart, what we can see on the 1 minute chart, there's that H3 imbalance. Price came down and nearly closed that up here. We saw that earlier. That was that wick I was telling you about. If we drag this right the way over, price did in fact fully close that there. Also, if we look at a H1 chart, if we're planning on taking a reversal to the upside, what we need to see is we need to see the low. Ideally, we need to see the low of this previous candle taken out, as in this candle here. Yeah, so we did. So we're starting to get our ticks. We've taken out the previous candle's low. We filled in this imbalance down here. This also coincides with a news release that happened at 3 o'clock. So, looking at it from here, what we've got is London's low. That was formed at about 10 past 12. We moved up from there, and then we accumulated, consolidated, went sideways, whatever you want to call it. We ranged, yeah? So I've been looking quite a lot at the moment into AMD, which is accumulation, manipulation and distribution. So if you look here, what you can see is London pushed up and then we accumulated. Now at 2:30 when the stock market opened, what we did is we sat in that accumulation for a little bit and then we manipulated price to the downside. This is manipulation. So this is a point that's irrelevant if you're looking for it. You know that you're looking for a bit of manipulation, and then you're looking for the distribution. So look how many boxes we're ticking. We've got our A, we've got our M. We've taken out the previous H1's low. We filled in the imbalance on a H3. In the meantime, we've been making this trend line to the downside. From this position here, we projected up and we came down. We came down lower than the 50%, which is good, that's discount price. We filled in the imbalance left here on an M1 chart between this wick and this wick. We totally filled that imbalance in. We broke through the trend line and retested it. We created a head and shoulders, being the left, the head and the right shoulder. If you couldn't ask for much more than an entry method like this happening at a place in price like this. We've taken London's low, we've filled in this imbalance, we've beaten the last H1's low, we've taken that out, cleared it. This one, cleared London, filled in the imbalance, pushed up, broke the trend line, retested the trend line, price is below the 50, filled in an imbalance. These are all things that go in our favour. This for me was a double down trade. I went 2% on this trade. Because if there was ever a dead cert for me, this was it. Targeting a 4-to-1. You got New York's high up here. We dragged that over, we're nearly at take profit. I'd say it's 99% likely now that we are going to in fact take profit on this trade. Again, even from this point here, we came down, 2 candlestick pullback, lower low, broke through. That's then transitioned this price bullish because we've broken structure. And then when you see this big dump down, obviously what you're doing is you're inducing sellers, because you've got people, all these, well, you've got all the sellers in this part of the market, plus you've got the people that are taking positions when it's coming up, trying to short it back down. Okay, so we understand that you've got accumulation, manipulation, and then distribution. I'll be very surprised if New York's high holds up. If this trade does close out, obviously I'm nearly at the end of this video now. I was hoping it would close out before then. It doesn't look like it's going to. It's going to make me wait. We love the wick game. Anyone who watches knows that I like to seem to find the wick near my take profit rather than an absolute smash through. We could do the stock market coughing right now. I'll let that candle close. We might get another expansion up. But yeah, this all started from the H3 perspective. If you look, the same principles on the H3 is working out on the M1. You know, you got your breaks of structure, your short-term highs, taking liquidity, coming into a daily order block. If we look at the daily chart, we can see here, big push up, forming this order block. Not only is it an impulse level, so we've got the return to impulse, but we also got the bullish, bearish, bullish pattern on a daily chart. This is where it all starts for me on the daily chart. This is where I look initially to find some sort of sense of direction. I mean, it could be that I thought it was a short day. You know, I could have marked up an order block, which could still be valid here as a short. But let me tell you why I didn't mark that up as a short order block. When this order block was formed, what did it achieve? All it achieved was liquidating that. It then hit that and closed back up here. So that, for me, isn't an order block I'm looking or very interested in trading. I can see why we're stalling on that price. We're actually at a 200 level, so we're at 24,202 at the moment. So we're just getting a little bit of a hold up around that 200 level. But yeah, you can see bullish order block, return to impulse on the daily. This sort of stuff, it sounds very easy, but it takes a little bit of sinking in and a little bit of experience to be able to see these things happening. H3, look at that trend on a H3. Come down, come down, come down, tap, closed up here. When you see that, it doesn't look to me like price is interested in them returning back down to these lows. So we then see the next push, the next leg of structure coming up, breaking through these short-term highs, leaving an imbalance, coming back down, checking that imbalance. We've got the H1 bearish candle here. This candle liquidated that H1 before then doing its reversal pattern that I've showed you on the M1. I'll show you one more time. You got price coming down, pushes up and breaks through this structural point. 2 candlestick pullback, bigger than the previous candle's high. Tick, came up, retested the trend line. We got in below that 50% level. There's the 50% level. We filled in an imbalance. We made a head and shoulders, big expansion up. By the time I've noticed the speed of the candle, click, entry. See how important entry is though? If I'd have brought my stop up that little bit tighter, that position would have closed out by now. If I'd have reacted a little bit faster on the entry, that position would have closed out by now. So, you know, you are only human, you're not a computer. This trade might turn around. At this point I probably will move to break even. I might even move to 1R and just take something which will be gutty, but yeah, I'll post if it wins. I'll probably post if it loses as well, to be fair, because the entry was so good.